Hey, it's Tyrone Jackson, the Wealthy Investor, coming back at you again, bam, with another wonderful, wonderful video to talk about stock trading in this market. And in this particular video, I really want to talk to you about one of my favorite stocks that I have to recommend right now and I like so much, and of course, Nike. Now, I want you to take a look at the long term trend here. About 5 years ago, Nike shares were trading around $53.26. But as you can see from looking at this chart, there's a period where the stock just bursts out and it starts a very, very strong upward trend, right? It peaked here at about $84, and then every once in a while, this stock has a tendency to come back down, let's say to 71, and it always bounces off its bottom. The stock here is peaked again at around 100. It had a slam all the way down at $75, and then there it is right back up to 100. So I like this stock a little bit more for trading and covered call writing than I do for holding for the long term, simply because of all this volatility you can see here. If you're covered call writing, it causes the call option premiums to rise. You can get some at the peak and you can get some shares down at the bottom. And when the retracement starts, like we see here, you can do really, really well as a trader. Okay? So my golden rules for trading and investing is, first of all, always look at the trend, the 5 year trend. But even if we come in and we look at the 6 month trend, we see that whenever the stock has a bottom, it comes right back up. That rise is called retracement. So when a stock bounces off the bottom consistently, it retraces its steps and then it usually has higher highs. Okay? You'll find this pattern a lot in Dow stocks. So when we're trading stocks, we want to look at the technicals, how the stock tends to behave over the long and short term. Again, if we zoom in here, it's a 3 month chart. You see this bottom here? Boom. Every time it hits a bottom, it bounces up. Another bottom, it bounces up. Another bottom, it bounces up. That's because there's resiliency from the institutions in the stock. So let me help you out in your financial education that you will need if you really want to be successful in this game. You're always looking for Dow stocks that are very resilient. That means that the institutional traders are buying bottoms, right? And letting stocks rise to the top. Okay? So let me give you 3 golden rules from the wealthy investor's point of view that I think will really help you in your trading and investing. Number one, there are essentially, at least in this market that we're in right now, there are 3 elements that cause a stock to increase in value. Number one is fundamentals. What do those quarterly earnings look like, and what do those annual earnings look like? Number two is the story. So let me explain to you what the story is here. Nike has trained the consumer to buy their products directly from their website. So even though there aren't a lot of sporting goods stores left in our world, they've managed a direct to consumer relationship. So they know what you like when you go to their website, and guess what they do? They put a cookie on, so when you come back for your favorite product, your product will be on sale. They collect your email address, they market to you, right? And they have great spokespeople for their brand. So the Air Jordan brand still brings in to Nike hundreds of millions of dollars. That's part of the story that makes the stock price rise. Does that make sense? And then the third element that makes the stock price rise, and when I do a lot of talk shows and I'm on a lot of podcasts, people like to bicker with me about this one, but it really is the float size. Okay, so let me explain that to you very, very quickly. If you want to choose winning stocks, you have to learn to observe the float. The float is the amount of shares that the public can get their hands on, so that when there's demand for the stock, we all want to buy it. If it's a small float stock, it's going to rise faster. Okay? If it's a big float stock, it's going to rise slower. So what do you want? You want stocks that have what? Strong fundamentals, you understand the story, and you know something about the size of the float. Because when you know something about the size of the float, when great things are happening at a company like Nike, like they signed the next Michael Jordan, whoever that may be, right? And they have a relationship that is direct to the consumer, what's going to happen? You're going to be the beneficiary of this rise in the stock. So you see, picking stocks that are really good it's not magic. It is a discipline that you can follow over and over and over. So what do I want you to remember from this video? That it's all about three things, at least right now in this market. In the future, it could change, but right now, strong fundamentals make stock rise. The story behind the stock, how are they marketing themselves? The fundamentals, of course, and the float size. Now, if you remember all of those, you'll be better positioned to choose stocks that have a tendency to actually rise. And so, my podcast is called the Trading Stocks Made Easy podcast. Why? Because you don't need to know everything about Japanese candlesticks and, deep retracing trends other than the general rules that help you to be successful. And I want you to, of course, apply my approach to the stock market so you don't drive yourself crazy, but you wind up in the stocks that have the tendency to rise. Okay? So today's lesson, fundamentals, float size, and stories are what's going to help you to choose really great stocks. And for those of you who want to, as I always say, if you go to WI Trade School right now and you start your membership, you'll see all the stocks that I recommend. And guess what? We know the float sizes, we like the trends, and we know the stories. That's going to be the cornerstone of your success right now. All right, choose wisely and choose with the right financial education.